So what's in this new stimulus package? Let's talk about how it affects you on the individual side and also as a small business owner. We'll talk about the different loan programs that are available for you if you were affected by COVID-19, as well as the changes made on the individual side. Hi, I'm Audra Wilson Russell, owner of WATS CPA firm, and let's jump into it. So the official name of the stimulus package, there was two acts passed, actually three. So we'll discuss two today. It's the Coronavirus Aid and Relief Economic Security, which is the CARES Act, and the Family First Coronavirus Response Act. So just to give you an overview of what we're talking about here today, on the individual side, we'll talk about the tax return deadlines that we extended, disaster relief payments, stimulus rebates, which is the big buzz right now, unemployment, charitable donations, the changes that are taking effect for 2020, retirement plan changes, and then on the business side of things, we'll talk about those major loans that are available right now for the SBA Economic Injury Disaster Loan. We'll talk about this $10,000 grant um, in bridge loans that are available through the state, and also the Paycheck Protection Loan. And then once we're done talking about the loans, we'll talk about the employee retention credits that you may be entitled to and payroll tax deferral. And I'll provide you with more links and resources in the description of this video. So on the individual side, like I said, we'll review the deadlines, relief payments, stimulus rebates, unemployment, charitable donations, and retirement plan. Let's jump right into it. The tax deadline was extended from April 15th all the way to July 15th. So any tax returns that are due on the 15th, which is typically your 1040 individual tax return and the corporate 1120 tax return, which is for C Corps, they are now due on July 15th, 2020. If you file an extension, normally you would get an extension from April to October, a 6-month automatic extension. If you do file an extension beyond the July 15th deadline, it's still due October 15th. So right now, the extended original due date is going to be um, July 15th. And if there's an extension on top of that, it's due October 15th. Now, as far as nonprofits and payroll tax returns, there's no changes to those due dates. They're still currently due on the date that it's originally due. So no changes unless the actual return due date falls on April 15th. Now, for your 2016 tax returns, if you are entitled to a refund, the IRS allows you to go back as far as 3 years to apply and receive a refund. If you do have a 2016 refund that you may be entitled to, you would still need to file that 2016 tax return by April 15th. That deadline has not been extended. Okay, so disaster relief payments. This is new and this is big within the new stimulus bill. In Section 139, it's a federally declared disaster. Right now, we're under a federally declared disaster for the entire nation. And what it does is it allows your employer to make tax-free payments to reimburse you or pay for certain expenses that otherwise wouldn't be tax-free to you and tax deductible to your employer. So those expenses include medical expenses not compensated by an insurance plan related to COVID-19. So you have to go out, need to see a doctor for treatment related to COVID-19. Your employer could actually pay for those expenses and they will not count as income to you. Any other health related expenses, including over the counter medication or hand sanitizer, that kind of stuff. Funeral expenses of employees' family as a as a result of COVID-19. So if you had the unfortunate event of having someone in your family, your immediate family, to pass away from this virus, this section does allow your employer to help pay with funeral expenses and that not be included as income to you. Childcare for workers whose normal source of childcare is unavailable due to COVID 19, tutoring expenses for employees' children, and also increased telecommunity costs such as computers, printers, or supplies. So right now we're pretty much all going virtual. Right now we're all on Zoom, we're on GoToMeeting, Google Meets, whatever. If you incur any cost, your employer can reimburse you for those costs, and again, tax free to you, tax deductible to your employer. Stimulus rebates. Okay, what we're all here for. The amounts. Let's start with the amounts in the adjusted gross income qualifying wage. So for any single people or married filing separate, you'll receive a tax credit of $1,200 if your income is $75,000 or lower. If your income is between 75,000 and 99,000, that $1,200 begins to phase out. So you won't lose the entire amount, you'll lose bits and pieces of it as your income is higher than the 75,000. For head of household, same dollar amount, 1,200, but the income limit, and this is adjusted gross income, your income limit here is 112,500 with complete phase out at 136.5. For married filing joint, double the credit, 2,400. So double the adjusted gross income limit. So if you're a married couple, you can earn up to 150,000 as adjusted gross income before the credit starts to phase out, all the way up to $198,000. Now, if there are any children on your return, there is 500 per child that's under the age 17 years old. So that's 16 and younger, 500 per child. Now, this isn't 500 per dependent. So if you do have dependent parents or other relatives or things like that that are not children, then you will not get the $500. And then if you did have any kind of like older teenage children that filed their own tax return and they didn't claim their own exemption, they will not get the $500. Any parents that you've claimed on your tax return, you will not get $500 for that parent, and that parent will not get $500 as well. Okay, so who will not get the credit? If you have not filed your 2018 tax return nor your 2019 tax return, right now there's no mechanism for you to get it. But if you are on Social Security, you will. So there is not a requirement for people who are on Social Security to file a tax return in order to get the stimulus rebate. They'll automatically get it. If you are a non-resident alien, you will not get this credit. If you do not have a valid Social Security number, you will not get this credit. If you owe child support, you will not get this credit. Now, I do not know if the credit that you may have been entitled to goes to the ex-spouse, ex-mother, ex-father, or whoever you owe the child support to. I just know that you will not get a credit. Now, if you owe back taxes, the IRS cannot use your stimulus payment to offset any liability or interest you owe. So that may or may not include student loans. The guidance isn't clear on that. So let's go through an example. This is an example of a single person with 2 children making $70,000 in adjusted gross income. So 70,000 is less than the 75. And so there's no phase out there. They'll get the full 1,200 plus 5 and 5 for each child. So 2,200 is what you'll get. In this scenario, same two children, but now you're married filing jointly and you've earned 150, you're not above the 150 limit, you'll get the 3,400, which is the 2,400 plus the five per child, which gives you another $1,000 for a $3,400 credit. So now if you're head of household, same two children, but now you're above the threshold, so $125,000, the reduction percentage is $500 of the excess. So 125 minus the 112.5 is 12,500. Multiply that times 5%. Your credit is being reduced by $625. So then you'll only get $1,575. So the more you earn, that excess over the limit, 5% of that gets phased out and backed out of the credit. Okay, so this credit is a refundable credit. And what that means is even if you do not have a tax liability, you will get the money. It's a pretty much money in your pocket. Let's see, it's an advance credit for 2020 tax year. So pretty much what's happening is when you prepare your tax return next year for this year, which is 2020, we're still living and breathing 2020. Once we're done with 2020 and it's time to file this tax return, there'll be a section on there for pretty much a stimulus credit. And they're advancing that credit to you now as opposed to having you wait until you file your taxes next year. So there will be a true up come next year when you do file your taxes. Let's say and they're basing this off of your 2019 numbers. If you have not filed your 2019 tax return, then they're going to look at your 2018 numbers, which is why you need to have at least one of those 2 years filed in order to get the credit. Again, if you're collecting Social Security, not a worry, you're going to get the credit. So back to the true up part is, let's say they're basing your income off of your 2019 tax return and you're single, making under the $75,000 limit, and you get the full $1,200 credit. But then when you file your 2020 tax return, and if you're over that $75,000 limit, there hasn't been any word on if you'll need to repay or you will owe more money due to the overpayment. But what we do know is that if your 2019 tax return was over the limit and your credit was phased out and you got a smaller amount as the advance, when you file your 2020 and you're less than the 75,000, then they'll give you the rest of your credit. So it's almost like when they're true it up, they'll give you the rest of the money that you would have been entitled to. So that's a good thing. So look at both returns. If you haven't filed your 2019 and you expect it to be much lower than your 2018, go ahead and get those 2019 tax returns filed now so that the stimulus rebate could be based off of the lower income amount, which will qualify you for the full credit or more of the credit, if that makes sense. Before we jump into the unemployment changes, just heading back over to the credit. When they're going to look at the 2019 or 2018 tax returns, we don't know yet. So we are expecting it to happen within maybe the next 2 weeks. When our stimulus rebates going out yet, we don't know. So definitely keep your eyes open on the irs.gov website. They are providing updates there. As of now, they don't know. So I don't know what they don't know. As far as unemployment, there is a change to the unemployment benefit. So the actual benefit is going to depend on your state. I believe in the state of Florida, and don't quote me on this, it's like 200 and something odd dollars per week, Well, this new change entitles you to an additional 600 on top of that 200 for the next 4 months. So if you are in a situation where you are unemployed, head over, and this is for the state of Florida here. Head over to floridajobs.org/job seekers community services, and I'll include any links in the description of this video. Charitable contributions. As many of you may know, in order to take advantage of charitable contributions, you would have to itemize deductions. So the IRS allows you to either take a standard deduction or an itemized deduction. When you itemize, you are adding up certain expenses, and if it exceeded the standard that they already gave you based on your filing status, then bingo, you would go with the itemization. But oftentimes, and especially with the changes in the tax laws where your standard deduction was pretty much doubled, it's it kind of de-incentivizes people to itemize because those expenses were a lot lower than the standard that you already got. So what's changing for 2020 is they are allowing charitable donations as what they call an above the line deduction, which means you don't have to itemize in order to take the deduction. And this is a huge one because, we donate to Goodwill, we give our tithes, and may not reap the benefit of taking a deduction for it. Now you can take that deduction without having to itemize expenses. So that one is huge. Retirement plan changes. If you do have to take any money out of retirement due to the coronavirus and just being cash strapped, the IRS is waiving the additional 10% tax. There's still a 10% penalty, so you would definitely still see the penalty, but the taxes on the amount is being waived. Okay, so heading over to the businesses, we'll discuss the small business loans. There are three main loans. The first one is the SBA Economic Injury Disaster Loan. And kind of attached to that is a $10,000 grant as you're applying for that loan. And then the second one is the bridge loans. These bridge loans are state specific. So reach out to your state or Google your state to see what bridge loans are available. I'll also provide a link in the description to an Excel spreadsheet. It's an online Excel spreadsheet that was provided by Gusto Payroll that breaks down the different resources by state. So you can click on that, find your state, and see what loans are available to you. And then the third one, which is new, passed earlier this week, is the Paycheck Protections Loan. So we'll discuss those three options and, see what fits best. And then new is the employee retention credits, payroll tax deferrals, and then more resources and links. So let's talk about the SBA Economic Injury Disaster Loan. So who is eligible? Small businesses are eligible. Small businesses are defined by businesses with less than 500 employees, nonprofits, sole proprietors, and independent contractors. I know a lot of you have questions about I'm a sole prop. Am I eligible for a business loan? In this case, yes, you are eligible for this SBA disaster loan. The terms on here, you can borrow up to $2 million. It's payable over 30 years at 3.75% rate for profit businesses and 2.75% for nonprofit businesses. Okay, so now the emergency grant that's kind of attached to the SBA loan is $10,000 right now. The advance can be used to pay sick leave, to maintain payroll, or meet increased cost of materials, to make rent or mortgage payments or to repay any other obligations. The cherry on top is that the 10,000 is not required to be repaid, even if the disaster loan that you apply for is denied. So that is huge right now. So if you don't apply for anything, I would encourage you to apply for this one. Just be aware that you do have to state the specific reasons that you are applying for this loan, such as payroll, rent, materials, um, accounting, marketing, legal, that kind of stuff. So do note that on the application that that's what you're using it for. Bridge loans, again, these are loans that are offered through the state. And I'm here in the state of Florida, so this is the information that I have on the Florida state bridge loan. It's a short-term loan, it's interest-free, and again, loaned by the state of Florida. It is not a grant, so it is something that you have to pay back. Who would qualify? If you're a small business owner with at least 2 employees. So this isn't for the sole proprietors. You would not be eligible for this loan. So two to 100 employees. You can borrow up to $50,000. It's a 1-year term limit. Okay. Only one loan may be made per eligible business. All right. If you do have a previous bridge loan that is outstanding, you must pay that loan in full before you're able to take out another bridge loan. So if you did get a bridge loan from I think it was Hurricane Irma we had here in Florida, some people took out bridge loans. If you still have outstanding loan obligation from Hurricane Irma, you will not be able to take out an additional bridge loan. Let's see, the interest rate is 0 for that 1-year term. And the interest rate will be 12% if it goes beyond the 1 year. And here's the website. I'll also provide you the website in the link in the description of the video. All right, so now this new one, Paycheck Protection Loans. You're probably getting all types of emails in regards to the Paycheck Protection Loans. So when to apply? The race starts tomorrow. The race starts tomorrow, April 3rd, 2020, for small businesses and sole proprietors. Any independent contractors or self-employed, they can start applying on April 10th. So we're encouraging you to apply for this as soon as possible because there is a funding cap. So once the government runs out of money, that's pretty much, it's a wrap. So trying to get into, I guess, this first round of funding, if they do decide to do another round, I think there's some buzz or talk about them doing another pretty much stimulus package. So the covered period for this is going to be from February 15th to June 30th. And what I mean by covered period, you'll see in just a minute that this loan is forgiven if you use it on certain types of expenses. And so it has to be used to maintain workers, payroll, make mortgage payments, lease payments, and utility payments. Who's eligible for it? Again, small businesses with 500 or less employees, nonprofits, sole props, and independent contractors. The maximum amount of loan is up to $10 million. The lesser of up to $10 million, or 2.5, 2.5 times your monthly payroll. So your monthly payroll cost times 2.5 is the maximum amount of loan that you'll be able to take with this. So let's just do some math real quick. So let's say your monthly payroll cost is $30,000 a month. You do that 30,000 times 2.5, you can get up to $75,000 in loan. here. And again, that 75,000 would have to cover um, payroll, mortgage interest, lease payments, utilities, in order for it to be forgiven, because this loan is forgivable. Terms of the loans, it's a maximum maturity of 10 years, interest rate is 4%, and they're deferring payments between 6 and 12 months. So no payments on this loan for the first 6 years to a month to a year. You cannot use Paycheck Protection Loan for the same purpose as the SBA loan. So if you've applied for the SBA disaster loan and you've indicated that you're going to be covering payroll, rent, and utilities, you cannot take out this payment protection loan and use it for those same purposes. It has to be for a different purpose. So if you are applying for the SBA disaster loan and you are interested in applying for this loan, then I would recommend that you um, list other items on the SBA loan to be covered, such as your accounting, your marketing, your legal, office supplies, subscriptions, stuff like that, and leave the payroll portion of your expenses to the Paycheck Protection Loans program. Okay, so loan forgiveness, it has a loan forgiveness feature. So you may be eligible to have all or a portion of this loan forgiven if you use the funds for certain qualifying costs incurred and payments made for, again, payroll, mortgage interest, rent, and utilities. That's it. Anything that you use this money for beyond those four major categories will not be forgiven, and you will have to pay that portion of the loan back. And it is within an 8-week period. So remember, I said the covered period was from February 15th to June 30th. So any payments that you make during that time is what's covered. Anything beyond June 30th is not covered for forgiveness under this loan. All right, so 8 weeks of payments forgiven: mortgage interest, rent, utilities, payroll. Not more than 25% of the forgiven amount may be for non-payroll. So pretty much your payroll cost has to be at least 75% of the loan you take out. So if you did take out a $75,000 loan, multiply that by 75%, at least 56,250 has to be payroll cost related, and not the majority on rent or utilities. So this loan is ideal for people who have a higher payroll cost, as opposed to those who are maybe like a one-man S corp who doesn't have much payroll to begin with. If your utilities and your rent is a lot higher than your payroll, then this isn't the ideal program for you. Caveats to this: you cannot cut employees. The whole purpose of this loan is to keep people employed. If you've cut your employees during this 8-week period, then this loan will not be forgiven. There is a retention relief period where if you hire those employees back by June 30th, then you can apply to have the loan forgiven, as if you never fired the employees. And you cannot reduce their salaries. So, no laying off employees, no reducing their salaries. And if you do take the $10,000 advance, then this loan will be reduced by, oh, that's supposed to say 10,000, $10,000 advance loan. So you can do the SBA with the $10,000 grant and apply for the payment protection. The only thing is you cannot say that you're covering the same type of expenses with both loans. It has to be different. All right. And so how to prepare? Well, you go directly to your bank in order to apply for this loan. It has to be an SBA approved lender. I know that Chase is an SBA approved lender, and this is an email that some email message that I received from a client who banks with Chase. And this is pretty much what they told him. We encourage you to be prepared so that you have what you need when we're open our website for the application. So Chase has not opened their applications yet. The applications opened on tomorrow. So what they're telling people is to know the date you started your business, because you had to have been in business before February 15th, 2020. So you can't just start a new business and then apply for this loan. Detailed information to calculate your average monthly payroll costs. So you need to know what your payroll expenses are before you fill out the application. And then your annual revenues. So reach out to your accountants now to get your profit and loss statements, and your business mailing address. So let's see. There is a PDF application out there, and I'll just show this really quickly. So not sure if the bank that you are working with or the lender that you do have a relationship with is going to have you fill out this paper application, or if they're going to have their own online process. But this is pretty much the application, which I will have in the links to the video as well. So you'll see here, you'll pick what type of entity you are, fill in some basic information, and then here it'll say your average monthly payroll. You'll multiply that times 2.5, and then that will be your maximum loan amount. It's a really short application. I mean, it's really a one pager. So take a look at this. Take a look at the up two pager. Look at the certifying questions, initial. Each owner of the business, I believe, will have to fill out this application. Okay, so contact your banks now to see if they are an SBA approved lender. It has to go through the bank that you do business with, your business bank. Okay. All right. So let's do a comparison of the disaster loan versus the paycheck protections loan. So with the paycheck protections loan, again, it has to cover expenses such as payroll, salary, mortgage interest, rent, utilities, and interest on debt. For the disaster loan, it could cover those payroll costs, but it could also cover much more: accounts payable and other expenses, again, such as marketing, legal, accounting, supplies, any other accounts payable. The amount that you can take out for the SBA disaster loan, up to 2 million. For the payment protection program, 2.5 times your payroll cost, your monthly payroll cost. Payment protection program is a fixed 4%. The SBA disaster loan is 3.75 for for-profits, 2.75 for nonprofits. The terms, 6 to 12 months. I'm sorry, 10-year term with 6 to 12 months deferred, or up to 30 years. And the payment protection loan can be forgiven 100% if you use it on the expenses that it's intended for. The SBA disaster loan is not forgivable. You would have to pay every dime back over 30 years. So now, what's new? Some employee retention credit. So the government is encouraging small businesses to hold on to their employees. And if you are holding on to those employees, you may be entitled to, there's a few credits out there. This one is the employee retention credit. Eligible employees are allowed a credit against employment taxes equal to 50% of qualifying wages. Now, this credit will go on your payroll tax form. So if you do have a payroll company that you're working with, such as ADP, Gusto, Benefits Mall, whoever that you're using, contact your payroll providers to see if there's anything that you need to do extra in order to qualify for this credit. So on top of the credit that that you are entitled to, The IRS is also deferring the due date of the payments. So for the payment is delayed by 50% of your 2020 Social Security payroll cost. So that's 6.2% that you have to match your employees paying. You don't have to pay that until the end of December 2021. So next year. And then the other 50% is due the year after, December 2022. After that, then, the clock starts ticking on penalty and interest on unpaid payroll taxes. This one is a little tricky, which I would say if you have the funds to pay your payroll taxes, go ahead and get it out the way. Um, Otherwise, it could get really messy if you do not pay the payroll taxes by December 31st, 2021. 2021 for the 50% and then 2022 for the other 50%. And here are more links and resources to pretty much where I gathered most of this information from. There's some Forbes article here. There's the Florida Department of Economic Opportunity. I'll have the link here. This is the link to apply for unemployment in the state of Florida, a link to the bridge loans that we discussed, just different resources that you can look into. And I'm everywhere on the web. If you want to connect with me on LinkedIn, Facebook, Instagram, this should say Facebook. The link is correct, but the wording's not. Anyway, I'm at WATS CPA on all social media. Find me there. If you have any questions, leave them in the comment section of this video, and I will try my best to answer as much as I can. But right now, everything is kind of up in the air and just undefined right now. We're in new territory, uncharted territory. But I would encourage you guys to just keep the faith, keep it going, find ways to pivot. If just be creative in your business, but that's a different lecture. All right, so I hope you found this information useful and helpful. Thanks for watching.